I plan to take it to $100,000 by age 30. So as you can see on screen, I'm currently sitting at $6,231 inside my TFSA. And my goal is to hit $100,000 in that account by age 30. So for that to happen, let me pull up my calculator right here. So for that to happen, starting off with the $6,200 I'm at right now, with monthly contributions of $1,500 a month for the next 4 years at an annual return rate of around 14%. That's around how the broad market has been growing on average for the past 5 years. I am a little bit more diversified into some individual stocks, as you guys can see, but I'm gonna go ahead with assuming a conservative 14% over the next 4 years, and that would put me right at $100,000, 99 and 500 thousand to be exact. But yeah, just $1,500 a month for the next 4 years at that 14% is going to get me right to that $100,000 mark. And it really gets interesting because if I'm able to hit that $100,000 by age 30, and by that time I will be further ahead in my career as well. So my salary will increase, and I'll have basically more free money to invest every single month, right? So if I take a look at the same calculator I have here, and I up my contributions to $2,000 a month, and we keep that same 14% annual rate of return, and we zoom out over 10 years, bring me to age 40, my account would be worth roughly $850,000. And that number for me would be life changing. That would be a number where I could actually say, yeah, I'm financially free now. And I'm not even saying at that point I would be able to just retire and never work another day in my life, although that could be an option if I was willing to move outside of Canada to somewhere with a way lower cost of living, or even just outside of Ontario. Because once your portfolio hits the high six figures, like that 850,000 mark, just getting even a 7 to 10% return would be generating you 60 to $80,000 every year. Personally, I don't see myself taking that route and moving abroad, but either way, it would be great to have that option available. Um, I'm lucky enough that I'm very passionate about the career I'm going into, but I would still like to have that financial freedom to where I know I'm not waking up every day going to work just for the paycheck. I'm actually doing something I love, and I don't have to be stressing about retirement either, right? Because if you were to stretch out that compound interest even further, starting at $835,000 from age 40, going over to maybe age 50, age 60, that's going to be millions and millions of dollars at that point, right? So really, really secure retirement if you can get started in your mid 20s, just like me, and consistently put in an amount of money that's meaningful and get an average to maybe just above average return. So yeah, let's take a look at my holdings right now, actually. The markets have been taking a nice little dump here the past month, but I don't mind. Like I said, I'm investing in the long term, so minor swings, even big swings down within a month or a 3 month window don't really bother me at this point. I just see that as an opportunity to, build even more future wealth by accumulating more assets at a cheaper price. But first off in the portfolio, I have Hive Digital Technologies. So this is a Canadian company, basically a Bitcoin miner turned AI compute data center play. So this is really giving me exposure to Bitcoin, crypto, energy, and the whole AI trade, right? So it's hitting like three key sectors that I see to have huge potential growth in the future. And this company, I'm not going to go too deep into the company right now, but this company just signed a deal with Bell in Canada for like $220 million every year in guaranteed revenue. And they're building a huge, huge data center outside of Toronto in the GTA. So in the future, we might see this company partner up with like some big hyperscalers in the US, like Microsoft, Nvidia, and this company has huge potential. I don't know if you guys are aware, I don't know what you call him, an angel investor. His name's Leopold Archibald. He's known to have invested in this company quite early, but yeah, I think I got in at a decent price. The stock is down right now. Um, since I bought it a few months ago, I actually had like completed a swing trade on this stock before I bought and held all the shares I have now. I made like 400 bucks off that. just because I had seen a trend. It was going up and down super violently, and I just had like noticed that, and I was like, let me get in real quick. I think I can make a little bit of money on this. And it was a stock I was willing to hold long term anyway. So if that swing trade didn't work out, I was going to stay in the stock no matter what. But yeah, I took advantage of that. Total return right now, we're down 11% on it. But like I said, in this for the long term, I think that AI Factory is going to be coming online in 2028, I believe. So yeah, this is definitely going to be a hold, um, probably for the next 3 to 5 years for me. And I'm going to continue to add. When it's low right now, I have about 2,000 in it. I'd like to get around 3 to 4,000 in it because I truly believe this is a stock that can 3 to 5x, right? So that's a common theme you're going to see when I go here when I go through my holdings here. Right now, I have only $250 in VEQT, right? Um, Now I'm going to be adding to that the most aggressively starting right now, to bring that up to about 50% of my portfolio. Although I am going to be like doing individual stocks, I am going to have my portfolio like around 50 to 60% in a broad market ETF, just because I'm I don't claim to be some genius stock picker. I don't want to blow up my account when I'm investing for the long term. I'd rather have some steady growth locked in, and then take these more high risk trades on while I'm young, right? Because I am 26, and I do have some time to spare, I guess you could say, or with a like when you have a longer time horizon ahead of you in investing, your risk can be a little bit higher, right? That's what I'm trying to say. So at the beginning, I'm trying to take a little bit more risk, see if I can accelerate those gains while still having 50 to 60% in a broad market ETF. So that's a common theme you're going to see here in the next few videos when I do these updates on the whole 0 to 100K challenge. Is a lot of these next months where I'm investing that 1,500 every month, it's going to be going into VEQT. But the next stock I have, which is interesting, I actually had earnings today. It had a double beat on earnings, beat revenue and expected EPS. ServiceNow, sort of like an enterprise software AI company. And this one is really interesting to me because a lot of people at the beginning of the year, this stock is down. Well, let me see what it's down here. This stock is down 50% in the last year, and I think even more than that from all-time highs because of the whole like SaaS narrative and the software is dying. This company though has consistently grown besides that whole narrative. So it's going to be very interesting to see. The CEO of Nvidia was talking very highly of this company as well. Um, but yeah, even the CEO himself of ServiceNow was predicting the company to be worth about $1 trillion by 2030, and right now it's sitting at around 100 billion. So the CEO himself is buying stock, expecting a 10x. I would say maybe I'm expecting a 3 to 4x from this in the next 5 years. Definitely could go higher, but I'm holding for the long term. And I should have bought some more today. It dropped a lot. I think it dropped about 6% right before earnings, and then after hours tonight it was taking off after it showed a really good earnings. But yeah, I'm gonna be adding to this. I got in right around 95, $96 US. So yeah, I'll be holding this thing. I believe it's going to the 3 400s. I'll be holding this thing long term. And the next individual stock I have is Microsoft. So, like any good value investor, my goal with my individual stock picks is just to buy quality companies when they're undervalued. And I think Microsoft fits that perfectly. If you've been watching any podcasts or contents on the stock market, or even just on Twitter, you have probably seen that a lot of people are saying Microsoft is extremely undervalued right now, spending a lot of money to increase its AI capacity, and I just think that's going to pay off in the future. So I am in Microsoft. I'm going to be adding actually more to Microsoft in ServiceNow once I get that VEQT position up to around 50% of my portfolio. And the last individual holding, which I'm slightly ashamed of, is MSTR. So I had around $800 of this a month ago. Now I have about 400, and I did buy it originally when it was even lower than it was now. It went up a bit. I took some profits, and now I'm down like let me see. I'm down like 23 bucks on the rest of the money I have in there. I am probably going to sell this off when the market opens tomorrow. It's 1 a.m. right now at the time I'm recording this. I'm probably going to sell off this last 400 and just get into VEQT. I'm not a Bitcoin hater or anything like that. And I do believe Bitcoin is going to have another run and it will probably grow long into the future. But for the kind of compounding, the consistent compounding I want and the yearly return I'm looking for, crypto for me just doesn't really fit my vibe right now. So I'm gonna settle for getting my BTC exposure through Hive. Like I said, um, which is one of the biggest holdings in my portfolio, is partially a BTC miner. So the Bitcoin price has a direct impact on the price of that stock. So I'm gonna get my BTC exposure from them from now on. So that position will be getting sold off. And yeah, that is it for my holdings at this point. I will continue to update you guys probably on a weekly basis here as I go throughout the rest of the year. And we'll see if I can hit that 14% total return for the year that I was talking about. Honestly, I think I'm going to get closer to 20 to 30%. I believe that the conflict in Iran is going to come to an end very soon, and you're going to see the broader market really start to take off here. And I believe the whole SaaS is dead thing, the software is dead because of AI, is just not true. Especially like I said today, after seeing ServiceNow earnings and some of the stuff that Microsoft is doing, I think getting in when these stocks were really beaten up are going to do well for me by the end of the year. So, yeah, stay tuned, guys. I appreciate you watching, and I'll see you in the next video.